The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, looking good. Billy Ray, feeling good, Lewis. We're going to take a look at the German DAX like we usually do. Very important, folks. You can see a three drive to a top pattern there. It's relatively symmetrical, pretty symmetrical, and that's what we like to see when we're watching that. So we need to pay very close attention to that. And then also I posted the chart of the British pound versus the U.S. dollar on a weekly basis. It shows that has some good symmetry also. And that goes right along with what we were talking about yesterday in the U.S. dollar index. If you'll remember, we were watching the U.S. dollar to get down to that 91.63. We got as low as 91.72, missed it by 11 pips. The euro went exactly to the price as we were speaking yesterday at 120 and change, and we backed off over 150 pips. So that tells us that some type of a top, it may be the top or a top, but something's happened. The way I would handle that, it would be to give it a little bit of time and, watch the first 382 retracement and see how it handles. That is how I would be looking at that. So I think that's relatively important. Now, I've got a few charts to show you here this morning that I think are relatively important. I get them from another source, so whether they're correct or not, I don't know. I'm just sharing you the information because they came from Bloomberg, so it ought to be something pretty significant. I would think they would check this, but this is someone that's drawn an analogy between 1919 and where we are now. Whether this is correct or not, folks, I have no clue. All I know is that things go up and things go down, and I'm just sharing it to you. It's from Crescat Capital, but I don't know if it's going to happen or not. I don't try to play those because they're so rare that they're really not important. But here's something that I think is relatively important, and this is the Nasdaq last night. It was went right up to the area where we had the big ABCD pattern up in here. You'll see that that number came in at 24.69. We're now trading 40 handles under that. So that's a very important one that I think is worthy of your attention. And the other one that is also worthy of your attention is the one in the E-mini S&P, where that number that we were watching for the first standard deviation came in at 35.55. And we're trading about 10 handles lower than that right now. So there's a high probability that we might have made a top. Whether it's going to be the top or not, I don't know, and that doesn't really make any difference. And on a point of interest, Norm Winsky sent out a sell signal last night, and that's very rare. Norm usually sends a sell alert or something like that, but when he sends a sell, I think you have to pay attention to that. So pay attention. We do have the full moon today. And if here in the desert, it is absolutely beautiful. And we will have Stan Harley as our guest today. Tomorrow will be Arch Crawford, and Friday will be Bill Meridian. So those are ones we're watching. If you'll remember yesterday, we were talking about the potential for the the 135 pattern in the gold miner index, and we went right up to 73.60. And of course, we reversed because gold dropped from being up 20 to being down 15. So that pattern is still valid. It's, as long as you don't get above 43.80, that is a valid pattern, and you want to be able to be watching it. I'm jumping around here because I've got a few things that I want to get done here before we have our good friend Stan Harley on. But let's take a look here. This comes from Rich Anderson, also sent it on to me. It's basically showing you the U.S. dollar and how it's related to the 10-year bond. You'll notice here the divergence. The one that's important, folks, is that divergence in the middle. So that's the divergence in the RSI. And if you'll look at the top one there where it says U.S. dollar euro, you see that little three drive pattern? That's what we were watching yesterday. and that was the one we drew in gray, and showed you the importance of that number. So that's it. But look at where we are as far as overbought, and this could be a really big move here in this U.S. dollar, because it could have caught a lot of people on the wrong side, and whether that is going to be meaningful. But if you look at this on the long-term weekly, and I don't use weekly charts very often, but because of the importance of that number down there at 91 and change, you've got to pay attention. That was the 78% retracement, and we're down 6 months, so it's really, really an important number. This might only be a little bit of a rally. It might only rally 1, 2, 3 points, or it might be something really significant. The fact that the euro has backed off 150 pips from the high is the first sign that, yes, it could be something interesting. If it gets down more than 300 pips without a rally, you got something really big. So it's worth waiting on, in my opinion. It's like if you were buying gold down there at 1,030 back in December of 2017. That's the kind that you want to be looking for. Whether it's going to be that or not, I don't really know. But you know what, folks? Nobody else does either. So let's remind ourselves that we're in control of what we're doing. We have to decide where we enter, where we exit, and where we put our stops. And that's what we're trying to do here, is to give you just a little bit of an edge as we look at some of these things. Now, the bonds have held at a really key level. We're in the midst of a little rally here. We rallied a couple points here in the bonds. We're setting right at the 61% retracement of the high we made into Fed time last week, and so we need to watch these bonds because they could stop right here. Okay, someone will say, what would you kindly say about Winsky's note? As I recall, let me, I might still have it here in the old email. I don't know. I don't have my email up. Maybe I might get it real quick here. Hold on just a second here, Mr. Z, and maybe the trading gods will be with me, and I'll be able to see this. And, I think I've, I don't keep these because if I get too much, I just don't have, whoa. Well, I can't see it. Yep, here it is. I think this is it. Hold on, this might be it. It's in. Excuse me. It says moved in. I'm sorry. He said has moved into the sell alert zone. That was of yesterday, but the one today I thought for sure that it said sell, but it says basically the now index has moved to the sell alert zone. It's a cautionary indicator of moderate imbalance of too many longs. This is occurring with a full moon tonight. A blow-off top Wednesday morning would be ideal. That's what we're seeing possibly. So that's what he's saying. And, Norm is a pretty smart guy. So that's my guess of what he's looking at. So, and he is a pretty smart guy. So we really need to know about watching that. Okay. Next thing we know here is we want to another question. I did it answer your question, Z? I hope that did. But I'm just looking at the patterns, folks. There's no other oscillators or anything there. I'm just looking at those price swings, and they went up to areas where they should have some resistance. And when you're up 200 points overnight in the Dow Jones, it's hard for it to keep going up. It can, of course. But, the S&P was up about, 25 or 30 at one time. Of course, it's backed off some from that level. So this might be it. I don't know. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Posted another chart, and the reason why I did is I got 2 responses from people in email, so it must be interesting to them, probably interesting to us. It's the Case-Shiller Real Estate Index. I don't trade it. It's just an idea of maybe what's going on in the economy. As you can see here, it's been a long-term thing, so it's worthy of our attention considering all the stuff that's going on in the world with politics and COVID and economy and everything else. So it's something that may be important down the road, but who knows. Another one that is really important, and we talked about this last week because we had the really nice 3-drive pattern, which happens to be one of our very favorite because it works so well, is the fact that you had that 3-drive to a top pattern up there in the natural gas up there in that 270 area. We've now dropped 20. We actually dropped almost 30 handles. Yeah, we did. We dropped 30 handles down to the 240, 241 level. So we're looking for a little bit more. Now, we're down 4 days. That might be all we get. There should be really strong support at that 241 level in the natural gas that we hit so far this morning. Now, if this market is really bearish, folks, it's not going to hold 241 very often. It's going to give up and start down a whole lot. If you'll remember, going back to the left side of the chart over here, you can see how quickly things can change in natural gas. So don't get married to that position because there's a big ABCD up there with that 3-drive to a top pattern, and that could lead to a really severe correction, and you don't want to get caught in one of those things. So those are a few of the things that we're keeping in line here this morning. My comments regarding a top versus the top relates to the NASDAQ and also the S&P. The Russell has been lagging quite badly. That's the one you want to be selling because that's the weakest of the 4 indices. You don't want to even touch that NASDAQ unless you've got Billy Bucks and you're willing to risk them. So that's up to you. But the E-mini would be the second. E-mini S&P would be the second one. And then the third one would be the Dow Jones. And then the weakest, of course, is the Russell 2000. So let's keep that in mind. Let's go back and talk just a tiny bit about the corn market because the corn and beans have started to sell off. much like we've anticipated because of the fact that we had that big ABCD here in the December corn. We got all the way up to 365. We've dropped a dime since that point. Beans have dropped well over 25 cents from their high that they made on Monday. So there again was just a cautionary note. You had very, very bullish action and, very, very bullish price action into the news, and yet it didn't continue, and that's a very bearish thing. When you've got really bullish news and the market does not respond, it only has one place to go, folks, and that's to the downside. And the same thing, if you have really bearish news and the market doesn't want to go down, it tells you it wants to go up. Now, what has been going on since March 23rd where the news has been very bearish and prices keep going higher and higher? Let's take a little ruling. Guess what, folks? The stock market. We've been up for 23 weeks. I mean, this has been an incredible run, right in the midst of some of the most bearish news this old cowboy's ever seen. So you got to trade what you see, not what you hear or think, because that's where it's going to be. Watch that bar chart, because that's the one they can't hide from you. They can give you misinformation, they can lie to you and cheat and everything else, but they can't hide. If they're buying, prices are going up. If they're selling, prices are going down. I've been asked to comment about the Eastman Kodak, the fact that D.E. Shaw, the hedge fund, bought some of that, and of course the Eastman Kodak went up quite a bit. Folks, all I know is those folks over there at Renaissance Capital with Jim Simmons and D.E. Shaw, those guys are very, very smart. They've got a brain drain there for people coming out of MIT with the help of Andrew Lowe. They're all in business together on different things, as they should be, because they're incredibly bright. And I think they hire those people. Just a few years ago, the going salary for one of those MIT tech graduates in data mining and stuff like that was like $400,000 a year. And I don't think there's many doctors getting right out of medical school to get paid $400. We might get a few attorneys, but they're few and far between. So these are high-paid folks that are incredibly bright, and you can compete with them. You really can, because you're looking at something that you have to decide what you're going to do. You just have to decide when you want to trade against these folks or on the same side of them. That's the main thing. You can do it. This is not rocket science, boys and girls. It really isn't. There's just no other way to realize it. We've had a question here about the Bitcoin. I think Bitcoin's getting ready to make another run up, and that might be the same thing. I'll cover gold in just a second, folks. But you'll notice here that right now what we're looking at in Bitcoin, if you look at it really closely, and this is a daily chart, you're looking at a very, very classical head and shoulders pattern, and that is ordinarily a bearish pattern. In order to prove that to yourself, just go in, pull up a Bitcoin chart, look at it since the 1st of August to where we are here in the 2nd of September, and you'll see an absolute perfect head and shoulders pattern. It just it's an absolute textbook. You got the head, the left shoulder, the right shoulder, the same size. And so that's what you've got. It doesn't take much to break it. A move above 12,100 would certainly break this head and shoulders pattern, but right here at 11,900, it is a head and shoulders pattern. And we will be following this one in the future, because we do watch what some of the blockchains are doing, because that's all related to what's going on and all the stuff with TikTok, NickNock, whatever these companies are. They're all data mining, and we're trying to find out, what's going to happen with some of these things. Now, I believe Apple and Tesla are still up today. I'm not sure what the situation is here. Let me check and see what the markets are doing here before we come to the break, and then we're going to have Stan Harley as our guest here. And we back about the same as we were before, 35.47 in the S&P. And where we have in the gold here, we're down around 63. If you get that gold, let's just do gold quickly here, folks, because I know I saved the chart. Please tell me I saved the chart. Oh, yes, I did. Hold on a second here. Okay, 1 second here, folks. Get this chart up here for the gold. This is a 4-hour chart. We went up yesterday to hit the exact 78% retracement at 2001. We've now dropped $40 an ounce. We're down to the 1960 level. That is right about a 50% retracement. What we're watching to see how this is going to hold the 1960 level. It's going to be relatively important here this morning to see if we do this, because when gold is really bullish, it's not going to react more than $50. So we're at $50 right now at around the 1960s. So if you start seeing it break below the 1960 level into the 1950s, that tells you, we could be going down, and we could be going down hard, and that could be related to what's happened in the U.S. dollar. That we don't know, but like I say, nobody else does either. Let's stay tuned for Stan Harley, folks. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, folks, and unfortunately we have a little technical difficulty with Stan. Hopefully we'll get that done here pretty soon, because he's got some really nice charts here that he's going to share with us. So hopefully we'll get this fixed up today, and we'll be able to keep watching. We'll keep watching it as we go through. Let me take a quick look here to see what the markets are doing here as we come into the opening. See the S&P starting to weakening, and the Dow Jones, the Nasdaq is weakening badly too. So there's a high probability, folks, here that we've made some type of a top here. Now let me hold on. That might be our main man, Stan. Let's see if we can get it. Okay, all righty. I'm sorry, there are no technical difficulties. The problem is the guest hasn't signed up here. My bad, but that's the way it goes. Let's move on here to talk about these markets, because I want to share with you what I think is really important here in the S&P, folks, and that is there is you know how we watch these critical times during the day, and the main one today, I'll give you my 2 cents worth here. What the heck, since we got a little bit of time and I have some fun doing this, I'm just going to bring to you what the forecast is going to be for the S&P today. But folks, you see where we are. We're here at 9:30. That means around between 9:30 and quarter to 10, we should rally for an hour into 10:30. Now, the key point here, folks, you'll notice here is at 11:30. Wow, we're down 20-some handles already. This is a good sign. The key point today, folks, is look at 11:30. You see that really strong move between 11:30. That just means the market has a bias to go up. It has nothing to do with the price values or anything like that. It just means there's a bias to the upside after 11:30. But the key function here is if it's not going up by 12:30, shut the front door and raise the rent. That means this thing has inverted, and that means you're going to have a big down day in stocks today, if that's the case. Now, whether that is the case or not, I don't know. But like I say all the time, nobody else does either. So let's remind ourselves of that. Stay very, very close. Now, we've just tagged below the key level that we were looking at in the gold here at the 1957 level. That breaks quite a bit below the 1960 level. That should bring in a little bit of resistance now at 1960. And again, we're below that key level, so I think we're heading down to much lower prices in gold. Now, if I have a lot of things on my bucket list. I think I only have 2 things left, and let's get 2 of these things up here to talk to you about it. Here's what my fondest hope is, folks, for the gold market. Let me get this up here to show you. This is the market going back into 1978 in gold, when we got up to 250, and then we dropped all the way down to 191. Folks, that was a huge move. Folks, that was a big drop. It was a 44% drop in the price of gold. Everybody got bearish down in there. It was right at a 78% level off the April 25th low, and from there it went all the way up into January the 20th of 1980, where it topped at 865, and that was the top that lasted until 2011, when we got up to $1,931 back in August of 2011. So if we can get a really severe correction, somewhere around $300 in the gold, to get everybody bearish, because there's just too many people bullish in here right now. And if we can get that, that would really be something. Now, Bob is asking for, you're talking about you want to talk about the coffee, Bob? Is that, I think, what you're asking for? And I think we can do that for Bob. Bob's always one of our really good folks that calls in all the time. Hold on a second here. And there's our coffee, and we'll just get the daily up here. This has been a really good one for the folks in the den. Thanks to our good friend, Mr. Z. He has been a master of the coffee market, and boy, it's still smoking, Bob. Wow, good for you, pal. Let's get this up here. We're still heading higher. Let's get this price up here for the coffee. You'll be able to see it. Heck, it looks like almost the NASDAQ. You'll notice the 382 support there, folks. That is very important. You backed off for 6 days right into 382 area. You couldn't even make the 50% retracement level, and look what's happened. You went from 114 all the way up to 132. You wrapped another $18 a pound in the coffee, and now we're exceeded the highs of April. Now all we have left now is the highs way back there at 142, and that's a big move. And folks, just to show you what coffee can do, let's just look at this on a little bit longer time frame. This is the price of coffee Going back to 2017, we were at $1.80. And if you were just doing a simple ABCD Gartley on this, and we're going to do that right now, you're going to see here that you got an easy shot at making 157 in the coffee market, and we're at 130 right now. Well, we're up how many weeks now? I think we're up 6 weeks in a row, so I wouldn't be chasing it in here, but I'd be watching for any nice little pullback in here to give you a chance to come in and see if you're going to get to that level. That's very important. We got down to 1954 in the gold. We are breaking badly. We got down to 35.38 in the S&P. So those are the things. See, folks, if you don't do anything today other than watch the S&P at 11:30, that's in about 2 hours. Because after that time, there should be a significant bottom forming in. And remember, every time this market sells off a little bit, buyers come in. But the key is if it's going lower after 12:30, that's with 3.5 hours to go. 4.5 hours to go. That's where the key lies, because then the market is going to take a bearish tone to it, and then you'd be heading down for the rest of the day if you follow these types of things, and of course I do. So we'll watch it very closely. The euro is just getting trashed. We're almost down 200 points now in the euro, folks. We're down to 180, and we're right at this is where it makes it difficult, because we're right at a 78% level here in the not quite yet. It's got to go a little bit lower here. I'll post this one here so you folks can see it, but let's get this little puppy up here so we can get it in here. Okay, all right, that's what we're looking at. You see the 61% retracement there was at 118.60, and we're now 118.38 right now. 118.20 is the 78% level, but frankly, folks, this has got a chance to do something, really big. If you remember yesterday when we were on the air, let's just get this up here so you folks can take a look at it. We were watching for that 3 drive to a top pattern that we liked. You'll notice that we were watching it at the area of 1.2010. That was 180 pips from where we are right now. And not only that, but it's come down hard the first 2 times. That tells us that we're most probably heading for a minimum, folks, would be a 1.618 expansion of that whole range, and that would take you to 115.60. I don't know if that's going to happen, but that's another 250 handles lower. And believe me, when they catch these guys on the wrong side of the market in the dollar index and things like that, that's where they really have a run. So watch that. If we get below 117, we're heading to 115.60. So watch 117. That's going to be a real interesting one. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and I believe we have Stan Harley of the Harley Stock Market Letter on the line. Stan, are you there?
Hello, Larry. Good morning. Good morning. We had a little technical difficulty a little while ago.
That's not a problem. I run to them daily. It's my curse. Listen. I've got your first chart up. You want to tell the folks what you're looking at here?
Yeah.
This is that's the Dow Jones from 1900. I wasn't trading back then, but it was a long time ago. Oh wait, that goes back to 1600. That to the dollar. Woo! Go ahead. I won't bother you. Go ahead. That's way beyond my pay grade. Fire away, Stan.
Larry, incidentally, I heard you talking about Jim Simmons earlier and the Renaissance Group. I read an interesting biography on him a few months ago. Fascinating reading if people can get a hold of it. This first chart, this is the Dow Jones Industrials going back several hundred years. And this data is hard to come by. I obtained it from the Foundation for the Study of Cycles. Prior to 1792, it's synthesized from the British market, so it's a synthetic Dow. But a couple of things stand out here that are very, very important. I found just by trial and error that if I used 1784, which was the end of the Revolutionary War with Britain and the beginning of the USA, if I used that as a genesis point, I found by looking either left or right Fibonacci numbers or multiples thereof, it lined up with major tops every time. So, for example, 1784, going to the left, 144 Fibonacci years, lined up with the Dutch tulip mania. Then if you go to the left 34 times 2, 68 years, it lined up with the South Sea bubble of 1720. If you go to the right in time, forward in time, 55 years, it lined up with the top in 1835. If you go to the right in time, 144 Fibonacci years, it lined up with the top in 1929. And of course, those of us who are well-versed in Fibonacci, like you and probably most of the viewers, the next number in the series, 233, and it lines up with 2021, where we are right now. And by doing a regression analysis where I plug in all the data points and find the least squares best fit to the data, it lines up, Larry, with right in the present time frame for a major pinnacle top. Mm-hmm. Next chart.
Okay.
What I've done is I've kind of honed in with a magnifying glass a little bit more and looked at the data from 1900 through the present. And what I have found is, Larry, tops can be defined by looking at prior bottoms. And that's the best way to pinpoint a top is by looking at bottoms. Bottoms tend to project tops, and retests of bottoms tend to project lows, in my experience. And I found by projecting the Fibonacci series from the low in July 1932, it lined up with every single major top without exception. So, for example, you take the July 32 low, you add 34 years, line up with the top in 1966. You go to the right, 42, which is 2 times 21, it's the 1973 top. If you go 55 years, 1987 top, and so on. If you go 89 years from the 1932 bottom, it lines up with 2021. And this is 2020. Now, I took this a step further. I actually took the monthly data and plugged it into a spreadsheet and did what's called regression analysis, which finds the best mathematical fit to the data. And Larry, what it indicates is that 89-year cycle top is due ideally October 2020, and the standard deviation on that analysis is a little over 7 months. So it says It's telling us major top from 1932 due in the vicinity of October 2020, and the yearly data also says a major top is due in the present time frame. So we're starting to paint a picture of a major top developing.
Wow, this is really interesting. Now, of course, you mean major top. You don't mean Tesla and Microsoft and Apple and some of these. No, I'm just joking with you, Stan, because those things that they'll be the ones that drag us down the most would be my guess. But it's certainly been amazing to see Tesla selling at 1,200 times earnings.
Well, and this is the absurdity of it. And I think we all who've been in the markets for quite some time can see the irrational nature of what's going on now. It's crazy, the absurd valuations that are placed on some equity prices. And clearly, we've got a major top developing. It's not over yet. I think we have another couple of months. This next chart is something I found only very recently, and it's helping me pin down where I think the top is likely to occur. This is a busy chart. It's a daily chart going back about 5 years. But what I found is this, Larry. By looking at major primary cycle bottoms, I can get a pretty good idea of where a primary cycle top is likely to occur. A primary cycle, actually, I borrowed the term from the late Walter Brezert. I differ with him a little bit on the timing of it. I find that the primary cycle averages about 8 months or 170 trading days. The Foundation for the Study of Cycles, with their program, pegs it at 172 trading days. We're essentially talking about the same cycle. It's about 8.2 months. But if one looks at this chart and looks at every single primary cycle bottom and then go forward in time, about 98 weeks, 477 trading days, plus or minus a few, it lines up with every single top, without exception. And to kind of summarize here, if we look at the top in December 26, 2018, you project forward about 98, 97 weeks, it lines up with the tail end of October, beginning of November, which, interestingly enough, is when the election is. So what is this telling me? I think this market is going to keep chug-a-lugging higher. We could hit a soft pass this week, back off a little bit, but by and large, I think this melt-up is going to continue right up into Election Day, and that's going to be it. Okay.
Very interesting. Well, back in 16th of November was a major bottom. You know, we've been up for several years. We'd probably still be going for the Kibona thing. You know, the reason why I'm in Tucson was because of Walt Bressert. I used to come over here and visit he and Teresa all the time. And then when it got time to move out of California, I said, this is why I picked Tucson. I've always liked the place, but I used to come over and visit him all the time here in cowboy country back in the mid 80s and early 90s and stuff. And then, of course, he got sick and passed away rather quickly. But he was a great man, Walt Bressert. He was a really super fellow, just as nice as could be.
I don't know if you know this, but his son, Jerome Bressert, just recently moved to Tucson. And
Jerome's back here in Tucson?
Yes, and I just saw Jerome. I saw Jerome a month ago. I had lunch with him in Scottsdale. That's a suburb of Phoenix.
Oh, wow.
A very, very bright, very talented trader.
Yes, he is. He said, he got stung so bad on the thing with Russell Wassendorf, with the Peregrine Financial. He really got hurt bad because all of his customers were there, and he really got hurt badly, which I was very sad. Would you do me a favor, Stan? Drop me his phone number, would you please? Because I would like to call Jerome and have him on the show just to visit with him, talk a little bit about his dad and what he's doing now, because he's certainly a class act. Hey, thanks for joining us, my friend, and we'll have you on again soon, especially as we get into October, okay?
Look forward to it.
Hey, thank you very much. Stan Harley, folks, the Harley Stock Market Letter, 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I wanted to mention yesterday we talked a little bit about the article that Art Cashin wrote about splitting stocks, and there was a gentleman on Bloomberg today. He was supposed to be knowing what he's doing, and I don't think he did. He basically didn't really describe what stock splitting is all about. Basically, it adds more stock. That's, you have 5 stocks and they split, and If a reverse split, it's if you have 5 and we do a reverse split to 1. We've seen that happen during the 2009 debacle. But usually a stock split is 5 for 1. You have 1 share. Now you have 5 shares at 1/5 the price. So that's nothing more. And what it is, it helps add liquidity, makes prices cheaper, so that some people can buy it at a cheaper price, so they don't have. But now they have it, so they can buy half shares. So why they have splits, it's up to them. I don't know. But that article, I'm going to post it into the room here one more time, so you folks can take a look at it, because it's a very good article to describes what stock splitting is all about from the master himself, Art Cashin, the oldest member of the New York Stock Exchange, and he's still under the weather a bit, but he's going to be back with us soon, we hope. Remember, folks, we're breaking pretty good here in the euro this morning. The stock indexes may or may not have made a top. It all depends on 12:30. In an hour and a half from where we are right now, see 10, 11, 12:30, that's 2.5 hours. If we are not breaking lower, if we start rallying around that time, then we got a chance to rally the rest of the day. But if we're making lower lows after 12:30, that is going to be tremendously bearish. And you don't want to stand in front of that because those freight trains can be very, very ominous, as you know, and you don't want to do that. So just keep in mind that area. I'm going to show you why it's important. You're going to bring it up here just for kicks and giggles. You'll be able to see here if we're going down after 12 o'clock, it's 12 to 12:30. That is not good. Remember, we've been up since Hector was a pup, and that dog's now on 13 years old. So we're due to have a down day. We're up 10 days in a row, I believe, in the NASDAQ. So just a down day would actually be a breather for the longs, I would think. So live every day in an attitude of gratitude. We'll see you tomorrow with Arch Crawford as our guest.